Hi, welcome back once again to CBSE Board Economics. I'm Saddam Hussain. As I told in earlier videos, this year we'll be putting more videos with MCQs, multiple choice questions. Or some of the questions you have true and false. Some of the questions you have fill in the blanks, and some of the questions you have one word or one sentence. That means this year they're giving more emphasis on multiple choice questions which are very scoring because you don't have to write. But the only minus point or the disadvantage of these questions is either you know the answer or you don't know the answer. No guessing. It won't help you. So let's start. There is a question here. Understand the question properly. Giving reason, explain how the following will be entered in current account or capital account. This is the first point. They must have given you some values here. Should we take it in the current account or capital account of the balance of payments? You just have to write it's taken under the current account and give the reasoning, or capital account. Why do you feel that you are taking under the capital account? Give the reasoning. Not only that, they're asking you here on credit or debit side of BOP. Should we take these values on the credit and debit side of BOP? Before we go to this question, let's refresh our memory. I hope you recollect. Balance of payment, BOP. Balance of trade, BOT. Balance of trade is a narrow term which we discussed. It is the difference between exports and imports of only. I repeat, BOT is the difference between exports and imports of only visible items, merchandise we call it, or goods, which you can see and touch, goods which you can visible, you can see. It may be a car, maybe pulses, maybe food grains, maybe gold, maybe iron ore. So that is the difference between BOT and BOP. And BOP is a broader term. It includes not only exports and imports of goods, it includes services also. Services includes, it can be shipping services, it can be banking services, it can be tourism services, it can be IT, information and technology services, BPOs, business process outsourcing. A lot of services are there. It can be transfer payments, it can be non-factor payments, it can be gifts, it can be transfers, any of these. So BOP is a broader term. BOP again is divided into two parts. You recollect, one is a current account, one is capital account. What current account? Current account deals with the current, means day-to-day exports and imports of goods and services. This can be export of goods, import of goods, exports of services, import of services, transfer payments made abroad, transfer payments received from abroad, gifts sent abroad, gifts received from abroad. It can be factor incomes from abroad, factor payments made to abroad. That's a current account. Capital account deals something to deal with the capital. That is investments. Investments. We are investing in another country, they are investing in our country, we are borrowing from them, they are borrowing from us. That is a capital account. Capital account deals with the assets and liabilities of the country with the rest of the world. Assets and liabilities of the country with the rest of the world. It deals with assets and liabilities. It deals with borrowings, it deals with investment. This can be direct investments, this can be portfolio investments, this can be done by the government, this can be done by the private firms. That's a capital account. So we got broad idea about current and capital account, which items will go where. Not only this, let's discuss about credit and debit items while calculating BOP. What is a credit and what is a debit item? In BOP, account students know very well, but now for the sake of the layman, right, that is the other students maybe Economics is a common subject for science students, economics common subject for humanities. They may not be having an idea about credit and debit items. Okay, from BOP points of view. What exactly is credit item? I'll tell you a simple example. If foreign exchange or dollars are coming to the country, we call it as a credit item. That means it is credited in our account. Okay, maybe how the dollars are coming, maybe we are exporting goods to them, we are getting dollars, so we will be crediting it to our account. Or maybe we are working abroad, some Indians are sending money to India, that is a credit item. What is a debit item? Debit item is the dollars are going from the country. Dollars are going, foreigners came and worked in India, we paid to them, so they have taken foreign exchange from India, that's a debit item. When the dollars flow inside the country, that's a credit item. When the dollars foreign exchange goes to other countries, that's a debit item. Just remember that, right? Credit item, that's inflow of dollars. Debit item is outflow of dollars by any kind of transactions. We're not discussing here whether it's a good or bad. No, we're not talking about that. Credit is inflow, debit is outflow. It's going from our account, balance of payments. Okay, now we got an idea, current account, capital account, credit and debit items in the balance of payments. Okay, let's see what they have given you. Apart from this, I'll give you lot many. Import of machinery, import of machinery. You may think here, so machine is a capital good. Well, of course, machine is a capital good, but we're importing a machine, machine is a good, just a good. When you import a machine, does it come under current account and capital account? No, it will not come under capital account because capital account deals with the liabilities and assets of the country, with the rest of the world. When you're importing a machine, neither our liabilities are affected nor our assets are affected. It's a part of current account. It's like importing a car, like it's importing the car also a machine, importing anything. It's importing anything, gold from other countries, or importing clothes from other countries, or importing a smart mobile phone. So, import of machinery, machine is not a part of capital account, it comes under current account. I hope you got it. So, they're asking you, giving reasons, explain how the following will be entered, current account or capital. You just write import of machine is a current account because it is a good, machinery is a good. It does not affect the liabilities assets of the country. Like this, it can be anything, import of a gold, import of a car, import of a smart mobile phone, or import of anything, gold jewelry from other countries, import of shoes, import of anything from other countries are entered under current account, not capital account. I told you capital account deals with the liabilities and assets. Okay. Now this is now the second part of the question. Does it come on the credit side or debit side of the balance of payment? Yes. Import of machine. When you import a machine from other countries, what happens? There will be outflow of foreign exchange. We have to pay them foreign exchange, dollars. So what happened to dollars? It has gone from the country. They are not come. So obviously it is a debit. It is entered under debit item of the current account of balance of payments. Have we got it? So import of machine is a current account because it is nothing but a good and it does not affect the liabilities and assets of the country. And when we import, obviously we have to pay foreign exchange to the country. So it will be a debit item of the BOP. Second one, investments from abroad. Obviously here they are saying investments. So investments from abroad is a part of the capital account. Why it's a part of capital account? I just told you the definition of capital account is because it's affecting the liabilities and assets of the country. When foreigners, maybe their direct investments, maybe their portfolio investments, so it is affecting our investments with the rest of the world. So it's a part of capital account. What you're supposed to write is a part of capital account because capital account deals with the assets and liabilities of the country. Does it come on the debit side or credit side? So I explained it so nicely. When they are investing, when the multinationals are investing in our country, more foreign exchange is coming, more dollars are coming inside the country. So that is a part of, we write it under credit side. That's it. I refresh once again, current balance of payments, current account and capital account. Current account deals with the exports and imports of goods, services, transfers, etc. Capital account deals with the assets and liabilities of the country with the rest of the world. Credit items means inflow of foreign exchange. Debit means outflow of foreign exchange. I'm sure you must have followed it. That's all we have time for today. Till we meet next time, keep smiling. There's no substitution for hard work. Bye-bye from Saddam Hussein.